Hello, everyone. I think we're ready to start. So, as usual, we are doing this weekly update from our YouTube channel and also from Facebook Live as well. I'll just put up the risk warning while I'm talking. This will be the last one for a couple of weeks. I'm going on holiday for 2 weeks, so we'll resume again in September. It's been an interesting few days, of course. If you've been watching markets, you've probably been reading about the market reaction to the situation in Turkey, concerns about the economic crisis over there. And we've seen massive moves in the US dollar and the Turkish lira. I think it moved 20% just on last Friday. So the lira fell, lost 20% of its value against the US dollar. And it has had an impact across the board. So we'll look at our usual markets in a bit more depth. If it's the first time that you've seen these, we do this every week on a Wednesday lunchtime, normally for sort of 20, 25 minutes, a quick look around all the major markets, see what's going on, and some of the levels to watch out for. Then after we finished, the recording is available. If you're watching it on our YouTube channel, have a look at some of the videos there as well. We always we try and put up a fresh video every day or so. I think there's a Bitcoin video going up a little bit later on today. But I think we've had enough of that risk warning for now. So let's just bring up the trading platform, which I've managed to lose. Hold on a second. Where is it? Oh, there it is. I've got too many things open. So we saw we've seen a lot of dollar strength, and you might wonder, well, hang on, why does what's going on in Turkey, why does that unnerve the rest of the markets? And for those of you who were watching markets when we had, for example, the Greek crisis, you could say the similar sort of thing where people were thinking, well, why does what happens in Greece have the potential to affect the rest of the world? And with Turkey, it's this word known as contagion. It's the worry that the risks there spread out everywhere else. Something like slightly more than a third of Turkey's debt is priced in a currency other than the Turkish lira. So, as Turkey's economy is in trouble anyway, inflation is running at 15% a year. So as the Turkish lira loses value against other currencies, its debt repayments become more expensive. Its debt repayments in non-lira denominated debt. So there's the concern that could we see them default on some of the debt, and of course that sends out ripples across the world. And what we've seen is it's a phrase that gets used, a flight to quality or a flight to safety. When people are nervous, they look for somewhere safe to put their money. And that has turned out to be the US dollar. Traditionally, it's gold, but we'll take a look at gold in a minute as well, because that's really taken a hit in the last few days. And you may have expected, with all of this uncertainty and nerves, the price of gold to rise, but it hasn't. And we're on an 18-month low. So we'll take a look at that in a sec. But so we've seen this massive move by the dollar against the Turkish lira. The lira's lost something like 45% this year against the dollar, lost 20% just on Friday. And this has pushed out into other markets. Here's our euro dollar. We're going to have a look at the impact on the euro and also on the pound. So I thought we'd just take a step back and look at the big picture view for euro dollar. We had this recovery for the euro that started in 2017 and traded as high as about 125 in February this year. And then for much of the last 3 months, euro dollar had been pretty boring. We'd had this sort of sideways trading range, but whenever we saw 115 tested, the buyers would come back in. So 115 ended up being a really solid floor for the euro. But it's all changed. If we look at the move on Friday, I think this started in the early hours of Friday morning. We saw the euro break the 115 level. Now, often, the first break can end up being something of a false break, and does the market recover? But that really hasn't been the case. Look where it's trading now. We're slipping even lower. So we traded as low as 114 end of last week, and now we're trading just 10, 12 points above the 113 mark. So let's just take this back. So this does look like, breakouts like this are traditionally seen as the sign that maybe a new trend, a new bigger move is starting. And I think if we're looking at targets, an obvious one, if we're looking at the lows on the way up, 113 was something of a level. It was the highs from June 2017. It was the lows in July 2017. So this time last year, 113 was something of a level for euro dollar. So that's the first one to watch. But saying that, it is still weak. And I think if we lose that, then we're looking at the 111 lows, the lows from back here, sort of end of May, and then again here in June. So it's really weak, euro dollar. We'll look at the pound again in a minute. But if we look on, if we pick up on maybe a chart, an intraday chart. So here we go. This is a 4-hour chart of euro dollar. So each candle represents 4 hours worth of trading. The trend clearly, let's just pick up on the trend on this breakdown. So the trend now following the break is clearly still down. And I think at the very least, to suggest that, okay, maybe we're going to see something of a recovery, we'd want to see 115, 115, 50 plus regained. So at the moment, any strength in euro against the US dollar looks to be a selling opportunity. So it's been a really interesting few days. These things always happen in the summer. The financial crisis kicked off in the summer. So it's precisely when everyone's away that we can often get some of these odd moves in markets or these big moves in markets. So the market's still concerned about Turkey. So US dollar still strong, and euro breaking below that big level. That is a pretty major break through 115, and it puts the euro US dollar back to its worst levels for about 13 months now. So I think 113 is the next level to watch. If we lose that, 111 looks like the next target. But for now, any rallies following this break do look like a selling opportunity, unless it manages to regain sort of 115, 115.50. Let's look at the pound. Not surprising, the pound has continued to go down. Of course, the pound US dollar has had its own problems over the last few months. Continued lack of progress with Brexit clearly isn't helping matters there. But when we have a surge for the US dollar, like we've had over the last few days, that's just going to put more pressure on the pound. So today we had inflation numbers out today for the UK. They came in, I think, at 2.5%, pretty much as expected. That's the annual inflation figure for the UK. So no real surprises there. It's currently trading almost right on that 127 level. And despite the fact, we'd had this bullish divergence on the RSI, it hasn't worked this time. We've had the market just plunge lower. Look how oversold this is. It looks to be the most oversold really since about back here, October 2016. So we've got to go back almost 2 years to have an RSI that was this oversold. But it's a market that's still going down. It's incredibly weak. I think the next there's obvious big support coming up, but for now it doesn't really care about big support levels. We've got support coming in from June. Around about 126, but you'd be in no hurry to buy into this market at the moment because it just sells off so sharply. Let's pick up again on maybe the intraday chart and look at some of the levels to watch. So we did have this trend on like the 4-hourly and the hourly chart we were watching. Let's just push that up a bit. And it's accelerated away. This downtrend did a good job of capping any rallies. It's accelerated away from that in recent days, following the breakdown through sort of 130. And it's a market that's just incredibly weak. Even if we had a 600-point rally from where we are now, so a 6-cent rally up to 133, that bit of the downtrend from May is still very much intact. So as tempting as it is, and I get tempted as well to try and pick the bottom on pound US dollar, it's a market that is still incredibly weak. So let's see what happens over the rest of this week. It is probably due some sort of bounce back because the US dollar has been so strong. But for now, there are so many little obstacles in the way. Even if we rallied up to sort of 128.25, 128.50, there's resistance there. So it's a market, pound US dollar, that just cannot hang on to any sort of recovery. So the dollar is definitely on something of a rip at the moment, with people seeing it as the safe destination for cash with some of the nerves that we have in markets. We'll do one that we normally don't do to the end, but I think it's worth a look, just talking about what's been going on in Turkey and markets being nervous, is gold. Traditionally, in times of turmoil and worry, gold is seen as a safe haven. So I'm just going to scroll that chart back a bit. So on Friday, end of last week, gold was holding steady above the $1,200 mark. We had seen this decline from the 12th, 7th, that's what we're talking about, from April, where the market had dropped about 10% from 1360 down to 1200, slightly more than 12%. And we were holding above 1200. And I was quite surprised at the end of last week that, considering how strong the US dollar was against everything, that we weren't seeing gold slide. But I thought, well, maybe it's acting as a safe haven. But that has changed this week. Look at it. There's the move this week. So this level that the market had been holding above 1200, it's gone sailing through. So we're now at the lowest since, I'm going to go back to January of 2017, these sort of levels. So we've got maybe a bit of support coming in around about the 1185 mark. But again, it's really weak. You know, a currency, not a currency, a commodity that traditionally acts as a safe haven for someone to park their cash if they don't want to have risk, gold. So a market that traditionally does really well, when other markets are worried, isn't. And it's just the dollar. The dollar appears to have taken over, you know, the mantle of being a safe haven. So really weak. You know, the break below 1200 is weak. Does suggest there's a bit more weakness to come. Clear downtrend in gold. At the moment, it would need to rally through, I'd say at the very least, these old highs, 1235 from the end of July, to shake off this weakness. So still a very weak market, and it's been all about the US dollar in recent days. You know, and other markets really paying the price here and pushing lower. You know, it doesn't mean, of course, that we're going to see this carry on for weeks now. You know, we may well see it snap back, but I think because markets have been so rattled by what's been happening with Turkey, I think any turnaround is still going to take time. You know, so I don't think, famous last words, we're going to see gold trading at 1250 anytime soon. You know, I can't help feeling that maybe this decline in gold has gone a little bit too far. But looking at it today, it's a market that's still weak. So I'm personally quite tempted to be a buyer, but not yet. You know, we want to see some sort of stability come in, and we're just not getting that. You know, it's a market that is still very weak. We're pushing 18-month lows. You know, you can't really make that look positive, I think, at the moment. We'll come back to oil at the end, as we normally do. But before we have a look at stock markets, because stock markets are really interesting, I think, particularly US stock markets. But before we do that, let's just take a quick look, because I know there's always a few cryptocurrency fans out there. We'll have a quick look at Bitcoin, because we had the move in Bitcoin from June up until the end of July. We saw the market go from 6,000 to about 8,400, and everyone starts getting excited and thinks, well, we're going to go back to 20,000. And of course, we haven't. The market's just sold off again. You know, the cryptocurrency is a really interesting study in market psychology. You know, end of last year, hardly a day went by where we didn't have some breaking news about cryptos and the price was going parabolic. This year, I did a quick Google this morning for the crypto video that's going out later today. There's just been nothing. There was this news a few weeks back about the potential for a Bitcoin ETF. It was one bit of news that helped the market higher. And then they said no to that, the SEC, the US regulator. And the market, look at where we are. The market's just drifted back, and there's been no real news. There's been no news this month about the cryptos. You know, nothing major. But what's interesting is where we are. You know, so if we were going to view this in isolation as just any other market, it's interesting that we're back down to this sort of the $5,500–6,000 zone for Bitcoin, and it has proved to be a floor. So, you know, an argument could be, if you really wanted to be a buyer of Bitcoin, then down here is where we've seen buyers come in since February. So the last 6 months, and actually November last year, we have seen buyers step in. If we lose 5,500, it's a pretty major break, you know. But I think it's interesting down here at these levels to see if we get lifted again up towards 8,000. But there really is no news flow, no hype, and it's just trading off pure market sentiment, I think. But it's interesting that we have seen over the last week at least some stability come back into the price. But I think if you're waiting for 20,000, you're going to have quite the wait on that one. Let's take a look at stock markets. So US stock markets. So we had those wobbles a couple of weeks ago, didn't we, on the tech stuff, particularly Facebook. Actually, well, before I look at this, let's have a quick look. What's Facebook done? because we had that big sell-off in Facebook, and yeah, it's recovering slightly, isn't it? But we had that 20% drop in Facebook shares, and we had disappointing numbers from Netflix. So we sort of a bit of a wobble for stock markets, for broader US stock markets. But look where we are now. This is the S&P 500, and I think if there's only one stock market that you want to watch, it's definitely the S&P 500. So it's a broader index than the Dow. The Dow is just 30 shares. This is 500 shares. At the moment, it's come off a bit in the overnight market, but yesterday it was at 28.40. The all-time highs are about 28.73. I think the official in-hours highs. So it's a market that is within 1.5% of the all-time high. So I think at the moment, famous last words. I wouldn't bet against us not seeing all-time highs. I think based on the momentum at the moment, there's a really good chance that we will see these old highs bust. The flip side of that is, if you thought, well, actually, you're talking rubbish and the market's going to crash from here, if you want to go short, this is a logical place to go short, because we've got a definite reference level for a stop loss, up above those old highs. If you think this bounce back is completely overdone, by definition, it shouldn't take out these old highs. But for me, I do feel at the moment there's still, this recovery that's been in place since April, still going strong. Yes, we get the odd sell-off. Sometimes they last for a few weeks, but the buyers come back in. So going into this afternoon, I think some short-term levels to watch. Let's just flip it over, then we'll look at some other stock markets. We've got the lows from earlier in the week coming in around about 28.10. Pretty short-term levels. Then we've got big levels out at sort of 27.90. When I clicked on my chart, I'm sending my chart a bit crazy. Hang on a second. Let's make it an hourly chart. There we go. So there's lots of support for this market. Even if it does sell off a bit from here, we've got lots of levels to keep an eye on. So 28.20, and then these bigger levels back, 27.90 to 2800. So for now, despite the odd day of wobbles, we saw a bit of nerves the end of last week on this Turkish situation. Stock markets still appear to be pretty strong. It's a slightly different story for the Dow. We looked at the Dow last week. The Dow has yet to get through 25,800, the highs from February. But again, you'd assume if we see the S&P 500 continue to push higher, we'll see this market move as well. And then finally for the US, let's take a look at the NASDAQ 100, the tech index, because this is the one, it's the tech stocks in recent years that have really driven this market higher. The success of Netflix, Facebook, Google, Amazon, all of those. We saw fresh all-time highs from the NASDAQ end of July, almost got back to it, but not quite recently. And again, lots of pockets of support. So US stock market's still strong, and it will be interesting to see if they can move out to fresh all-time highs in the next couple of months. Let's take a look at European markets. Let's have a look at the German DAX. Always sort of tends to do its own thing, the DAX. So I think it's one of the most popular stock markets with our clients, stock market indices to trade, and it really is, because of the volatility. Just today we've seen a 200-point range today on the DAX. It's a fair way away, I suppose, from its all-time highs. It's about 10% away from those all-time highs. But for short-term traders, clearly 12,100 was something of a level back in June. So let's see what happens the next couple of days if we see buyers come back in ahead of here. And finally, the FTSE. The FTSE in the UK is one that when we see pound weakness, it definitely does help the market. So quite a big chunk of the strength from here was down to weakness in the pound. So it helped lift the market. Again, it's a market that's been heavily hit today, but for the FTSE, we had seen 7,500 over the last couple of months being something of a floor, currently trading at 75.30. But all of these markets tend to be led by what's going on in the US. So it's the US market that dictates the rest of the world. And finally, for today, let's take a look at oil. I don't think it feels as if the oil market doesn't get that much coverage, I think, in the sort of the broader press. And it's a market that has moved, about 70% since June of last year. So from the lows at 42 to trade where we are now, it has lost some momentum, the price of oil, in the last 6 weeks or so. Pushed out to fresh highs for this move higher, almost up to $74, and it's drifted. And at the moment, it is drifting below that trend line. But I don't necessarily think that's the end of the trend. For me, I think if we lose $63, the $63 support, which is from the middle of June, then we have to start thinking about a much deeper sell-off. But for now, even though it's fallen out of the trend, we do still have higher highs and higher lows, assuming this level here holds. So I think oil is being, if you looked at it over the last month or so, it's trading roughly where it was a month ago. So drifting slightly lower, but broadly flat. But let's see what happens at $63. Do we see the buyers come back in? I think if we see 63 lost, we have to start worrying about a much deeper sell-off. So we'll start wrapping things up from there. So what's the interesting markets to watch? Well, I think for me, stock markets in the US over the next week, because we are so near those previous all-time highs on the S&P. We have just added the Turkish lira to trade. So clearly, based on the volatility that we've seen there this year, a lot of demand for clients. So that's just been added in. I think the Turkish lira has been clawing back some ground over the last couple of days after those incredible moves towards the end of last week. But more broadly, the US dollar, and in particular maybe euro dollar, following that big break, it's a market that is still weak. The dollar has really moved back into favor this year. Last year was the worst year for the dollar since 2003. And plenty of people came into this year thinking it's going to be another bad year. But since about sort of April, May, the US dollar has really turned around. Maybe in the short term, it's gone a bit too far. So maybe some of these markets, like the euro, like the pound, are due a short-term bounce. But the dollar, I think, in the medium term, is still pretty strong. And finally, gold, because it has been so weak, it's down to a 17-month low. Personally, I'll be looking for it to turn around, but I'll be in no hurry to buy it just yet. But this whole 1180, 1200 area, let's see if the buyers come back in. When it comes to economic announcements, we've still got a bit left this week. Tomorrow morning, we've got UK retail sales. Clearly, the state of the UK high street has been a big factor for the economy this year, with so many big names in trouble. House of Fraser, if you live in the UK, I know is one of the more recent ones to be bailed out by Sports Direct. But so UK retail sales tomorrow morning, and then on Friday, European inflation is due out, and it's expected to be just over 2% a year. So again, those numbers could affect both the pound and the euro in the next couple of days. So let's see what happens. We'll start wrapping things up there as usual. If you have any questions, you can drop me an email. My email address is david.jones@capital.com. You can follow me on Twitter for updates on charts and stuff, and I'm at Jones the Markets on Twitter. And of course, to find out more about Capital.com, set up a demo, open a real account, all that sort of stuff, just go to the website. But we'll wrap things up there, and we'll be back in 2 weeks following a little summer break to do it all again in September. But don't forget, there's always a load of content on our YouTube channel. But thanks for coming along, and enjoy the rest of your afternoon.